What would I do if I started trading again in 2025? When I started trading, we had pens and pencils. We didn't have computers, and we had abacuses, something like that. Can you imagine no computers and you start trading? Well, I wouldn't call it trading. I'd actually call it something more closer to investing, because we weren't trading with leveraged amounts. We were trading with one-to-one money, which is basically, if you think about it, kind of investing. But what we were trying to do is time the market. And the real way to make money in the markets is actually timing the markets, not trying to time the markets. But when you've got leverage trading, then it's better to time the markets and pick the right trades. I'm going to show you today what I would do if I started in 2025 and had all this technology at my disposal. Hey, for those of you who don't know me, I'm Rob. And for those of you who do know me, I am still Rob, and it's Coffee with Rob. But we're going to talk about what I would do to get started. Well, the first thing I would do is I would have a business plan. You guys know this. I wouldn't rely on systems to make me money. I wouldn't rely on a win rate to make me money. I wouldn't rely on scalping to make me money. I'd get a business plan together. And the simple reason for this is, if I was going to start any business in the high street or any factory in the industrial area, I'd know what I was going to be making, and I'd know what kind of business I'd be starting. I'd know what machinery I would need, how many staff members, how much money I'm going to need, all these fine things, which brings me to another thing. If you need money to get started in the markets and you don't have it and you want to start trading, then go and get yourself a funded account. I've left a link in the description. But remember, trading is risky. Trading is very risky. 60 to 80% of traders do lose money, and I know you think you're going to be in the top 30%, but you're probably not. Also on Thursdays, I have a weekly giveaway at the moment where I give away a 10k two-step challenge account. Be there. All you have to do is have left a comment somewhere, and I'm going to find it, and we're going to have a draw, and every week someone wins a 10k challenge account. So get involved in that if you want to. Don't forget to join as a member as well. By the way, we've got a membership, and you get all the perks that come with that as well. I'm going to take you to the charts, and I'm going to show you the system, the high probability system that'll help you choose the correct trades in the market. But this is not what's going to make you money. This is just going to help you choose the correct trades, because trading is a 50-50 game. A lot of you argue with me on this one. A lot of you disagree with me on this one. But at the end of the day, trading is a 50-50 game, because you're trading against other human beings, and human beings trade with emotion and psychology, and that's all it's about. There is no way that a market could be an 80-20 game or a 100% game, because if it was, the markets would basically be broke or be zero or not making any money. In trading, it has to be a 50-50 game. Somebody has to lose for somebody to win. When you take a trade, you've got a 50-50 chance of winning. And the only way that you can make a profit with this or have an edge with this is to have a business plan and a strategy. And I'm going to give you that strategy after the charts and at the end of this video. But first, let's go and have a look at the high probability price action system that we trade with and see if that will work for you. The system is easy. It's the strategy that's difficult. Let's go and have a look at the strategy, and let's show you how we trade in the markets. The system that we use, the price action system that will get you to the point you need to be at in trading. We'll simply take the US 500 here and we'll have a look at that. Is it possible to close this off? I can't remember actually, but it doesn't really matter. That's fine. I think we can actually do that. Now you've got a nice big chart in front of us, and we can have a look at this and we can see what we've got. So this is the US 500 on the 4 hour, because we trade on the 4 hour. And the reason I trade on the 4 hour is so that I can take time off, go to the beach, go to the shops, relax, do my thing. I've traded the day trading. I've done the 5-minute charts, and I've sat watching my computer the whole day. Believe me, 99% of traders do lose money on day trading, and you're not going to make it. It's going to be difficult for you, particularly if you're starting out. Don't think these guys tell you, oh, I open it for an hour and I make $1,000 and then I go and take the day off. No, you're going to open it for that first hour. You're going to lose 3 trades and you're going to sit there the whole day trying to get that money back. That's how it works. There's no two ways about it. There's no way around it. Oh, I actually forgot there is a trade open on this. Sorry. But it doesn't matter. That shouldn't affect anything. Now we trade 3 ways. And the 3 ways that we trade, the one is we trade with the trend. That is a trend. You see it's going up. That's a trend going up. The second way is we trade in a range. In other words, in between these levels. So if you have levels such as there might be a level here, a resistance area, and this would be a support area. And trading between the levels simply means you're buying at the bottom, you're selling at the top, you're buying at the bottom, you're selling at the top, you're buying at the bottom, you're selling at the top. That's all it means. That's a range. Trading in a range. Going to take that out the way because we don't need it. Now, normally I would take these levels, the support and resistance, from the daily level because it's just more reliable information. So what I would do is simply take my chart to the day and I'd go and fetch my levels there. And I'll normally actually also fetch them on a line chart because a line chart gives me closing prices. And then I'll have a relook at the candles and see what the wicks look like, because you have to be very careful with these wicks. People stand up and say something, you get a spike and it kind of puts you out of place when you're trying to draw your charts in. So do be careful of them. But they're valid. They're not invalid. There is money there. Like I say, do be careful of specific wicks. Some of them are a little bit out of place and you don't have to worry about them too much. For example, you'll see I've drawn a trend resistance in here, a trend support, and you want it to touch 3 times for it to be a valid trend support, but you'll see I've drawn it through that wick, through that spike, because that spike is not that important to me in this scenario. I'm looking for the trend. I'm not trying to change the world here. I'm looking for the trend, and I can see where the trend is. I can see where the price is hitting most of the time, and that's what I'm looking for, so that's my trend. What's the third way that we trade? The third way that we trade is break of structure. In other words, we counter trend. In other words, it's going against the trend. But we don't go against the trend while it's trending. In other words, I don't go short while it's in this trend. I'll go short once it breaks this trend. When's it going to break this trend? It'll break this trend once it breaks through this level, retests, and goes on down. That's the trade. You see here, it broke. This was a trend to the downside. It was bearish. It broke that trend to the upside, went up, came around, went up, gave me a green candle, buy, and there she goes. As you can see, what I did in this case is I actually waited for it on this trend. This was a trend support. It broke through, became a trend resistance, came back, tested it, came back, tested it, came back, tested it in this trend. It broke that trend and ran along inside this area. And then I decided once it broke through this area and out of this, what is now resistance, I decided to buy. You can see the buy there. It's broken to the upside. Big long green candle, there she goes, and up she goes. And that's what you're looking for. Now what you want to do is if it if it comes back and it breaks this structure to the downside, you will be wanting to get out of the trade. But if it stays in that trend and keeps on going up, you want to stay in the trade. You saw me draw another resistance in at the top here. You have to make sure it's going to break through that. And I've actually got this line here. This is actually a resistance. There's area of resistance is an area of money. What your job is in the market is to look for liquidity, to look for the money. And the money is where the price keeps bouncing off. So in other words, it gets here, it comes down, gets here, it comes down, gets here, it comes down. That means there's money there. There's money that's pushing the market down. It's not a line in the sand. It just means there's money there. Same for the support. Gets there, goes up. It means there's money there that's pushing it up. If it breaks through that money, it's going to fly to the upside because that means it's pushed all that money away and there's nothing to stop it. That's what you're looking for in the markets. You're simply looking for liquidity. The trends are just there so that you can have a line in the sand for yourself to determine if the trend is changing or if it's going in that direction. So if you're trading with the trend or you're trading break of structure, it's just so that you know which way the market's going, just to give you that confidence to take a trade, because this is a high probability trade. Go and check out my strategy after these charts and understand why I say this to you. Understand that it's not this system that's going to make you money. It's not, this is just a high probability trade. What's going to make you money is your business plan and your strategy in the market. Now you've seen the charts. Will that system work for you? If not, you can literally use any system that's available on the market. The course you went on and you paid thousands of dollars for, you can use that system. If you use fibs, if you use Bollinger Bands, if you use Ichimoku, if you use a moving average crossover system or an MACD, if you use volume, no matter. Everyone's got a system that works. Every single system in the market actually works, and they've all been back tested by some insane genius who believes that that's the only system that's going to make money in the markets and believes that a system's going to make them money. When in fact, all a system does is give you that high probability of having a good trade, which is what you're looking for. That's the edge you're looking for. Because if I said to you, here's a blank chart, choose a trade, choose a direction, you're going to scratch your head a bit and you're going to think, which way is it going to go? I don't know. It's going to take you a few minutes and then you'll just go, I'll just go up, I'll just buy. And then what do you do then? Well, this is when you need a business. But if I give you a high probability system and I say to you, choose a trade, then you're more confident in the trade that you're taking because you believe in your system and you believe that your system's going to give you the win. But disappointing when it doesn't, but you believe it will. And that's the important part, isn't it? Problem with systems is you got so much belief in them sometimes that when they go wrong, you start looking for other systems and then you start going on this vicious cycle of failure because your system fails and you go look for another system that works for a few trades, then it fails and you go look for another system that works for a few trades, then it fails. And so you go around, you end up back where you started. The problem with this is it's not the system that's failing. It's you. You're failing. It's your psychology. It's the way you're working with the trades. It's the way you are handling the market, the way you're handling the trades, which all comes down to the fear in your mind, the fear of missing out, the impatience. Instead of being patient, not being able to sit in your hands, not being comfortable, chasing trades, revenge trading, all of these things come into play, which cause you to lose in the markets. I've developed a strategy that works for me. And if you like this strategy, my gift to you, use it, don't use it, but here it is. And it's so simple. What I do is if I have a $100,000 account, I risk 1% per trade. That means I'm risking $1,000 per trade on that account. If you like, you can risk 0.5%. You can risk 10%. You can risk any percentage that you want on your account. I simply choose 1%. My reason for choosing 1% is if I do happen to lose 10 trades in a row, which is kind of bad and shouldn't happen, but if it does, I lose 10% of my account. When I started trading back in the day without computers, that was our stop loss, 10% on one trade. That was our stop loss. Now I can literally take 10 trades for that 10% loss. That's what I'm working with. Now I know I can lose 10% of the account if I'm trading. At 1% per trade, how do I work that out? That's $1,000. How do I work that out? How can I get the stop loss to be the same on every single trade? Well, it's really easy. First thing you do is identify the trade that you want to take. Now you've identified the trade. All you do is you go to the trade and you identify the invalidation area, the area where you know when the price gets to that area, that trade has failed dismally. There's no chance of that trade recovering. That's where I want my stop loss. The reason for that, guys, you don't want to be moving your stop loss every 5 minutes. You don't want to be dollar cost averaging. If it gets to the stop loss, let it go. Because you want to keep the stop loss the same on every single trade. This method in my madness. You've worked out where you want the stop loss. Now you work out how many lots, how many pips, how many points it is that you need to buy to get back to cost to cover that stop loss. Now you know the size of your trade. Now all you got to do is make sure you got a good risk to reward. Risk to reward is easy, guys. You want to make more than you're losing. If you're risking $1,000, you don't want to be making $100. You want to be making more than $1,000. And I'm not saying it has to be a staunch 2-to-1 or 3-to-1, but 2-to-1's great. You want to be making more. The simple fact of the matter is, to make more, you can't just, I'll just put my take profit there. You've got to be sure, when you look at the chart, that there's a possibility that your price could actually reach there and make you that profit. And then it's just a simple matter of managing the trade. And I usually manage the trade with a trailing stop loss. I trail it up and I keep the stop loss behind it. I take it into cost so that I'm not losing anything. So the trade's not costing me anything anymore. When it goes into profit, I move the stop loss into profit, and then I move it right up behind it when it gets close to my take profit. And if it comes back, I make my profit. That's as simple as it gets. It's not a complicated system. And you can use it with any system. Any system that you've been taught on a course. Because the one thing they don't teach you on a course, the one thing they don't teach you is that the market's 50-50. The other thing they don't teach you is you'll probably lose more trades than you'll win. And they don't teach you that you need a strategy, and that's all in the mind. They teach you that it's about the system that they're selling you, because they're normally selling you some fancy system. All the systems work. You can't prove them wrong. You can't go to them and say the system doesn't work. The system works. They'll prove to you that it works because they'll show you all their profitable trades. Won't show you all their losing trades, but they'll show you their profitable trades, and they'll prove to you that the system can or will work. How well it works is dependable. But at the end of the day, you're the one that's going to make it work. And at the end of the day, it really doesn't matter what system you use. If you have absolutely no system on earth whatsoever, you will achieve the same result. Now that's one that you're going to struggle to get your mind around. That's the one thing I would realize if I started trading all the way from the beginning again today. The one thing that I would understand is that no matter what system I use, the result will be the same, because the result is coming from within me. The result is me. When we do the live shows and we choose those trades together, and this guy chooses that trade, and that guy chooses that trade, and I choose a trade, and we choose all these different trades. And some of them win and some of them lose. What I've proven there, and what we will continue proving, is that it's how the trades are. It's not the system that's going to make you the money. The system is just going to give you the high probability trade. What it's going to prove is that some will win and some will lose. It's going to prove that basically we can manage the trades as best as we can, and we can only take what's dealt our way. That's the difficulty of it. Trading is hard, guys. Don't think that trading's easy. I know there's a lot of guys out there that will tell you that you can just draw money out of the sky and it'll just fall into your lap, but it's not going to. It's not going to happen. It is a difficult career to overcome. This is not something you learn in a week. This is also not something you just go and learn on a course. I know they've told you this, but you can't go on a course and go home and be a successful trader. All they've taught you is all the terminology, a little bit about the stock market. Now you know a little bit. You've still got a long way to go, unfortunately. It takes time to get the feel. It takes time to get your mind around it. But guys, thanks for watching. Do come back for the live shows. Don't forget to like, comment, and subscribe. It does help the channel. And if your comments are in there, you will be elected into the draw. So hopefully that will be something that you want. If you don't want it, we can hand it off to someone else. Till the next time, guys, don't forget, keep your feet in the ground, reach for the sky, and thanks for watching. Cheers, ciao, and bye.